Hey everybody, welcome to this Friday game plan. My name is Gareth Soloway, Chief Market Strategist here at VerifiedInvesting.com. All right, so as always, we're going to get into the nitty-gritty, no BS, just charts and data. And we did get some data out this morning, retail sales coming in ever so slightly weaker than expected, but still solid. And I think the markets, again, are just monitoring the consumer. My thesis is as long as the stock market stays basically at all-time highs and doesn't correct significantly, you're going to get consumers to spend. Now, listen, it may be the mid to upper income spending, but they will continue to spend heavily even if the lower income is not spending. Now, if the stock market comes in, that's where consumers, again, across the board will feel the pinch and we'll see it in the data. All right, import prices coming in a little bit hotter than expected. Nothing surprising there as tariffs, again, are impacting import prices there. All right, couple other things to go over. We had some big news yesterday just before the end of the day. The U.S. government being rumored potentially to take a position in Intel. Again, this is debatable whether or not this is something good, something bad. Ultimately, again, we'll see if it even happens. But, once you get the government to start taking positions in companies, the question is, does it change things? And number one, I would also be curious, how does that affect other semiconductors? Does Intel then get favored because the government owns a stake and therefore maybe an Nvidia or other players could do more poorly as they are not favored? So all of these things obviously coming together. And let's be fair, the U.S. government has taken stakes in the past. We've obviously saw it in 2009 with the GM and Ford ownerships that were eventually, gotten rid of, Fannie and Freddie, those type of things. But those are under extreme circumstances. I highly doubt Intel is at that kind of do or die period, nor is it kind of a champion in the U.S. at this point with a market cap that's not that big compared to Nvidia and other semiconductor stocks. All right, so let's get into the markets here and see where we are this morning. Taking a look at the S&P futures, we are trading slightly higher on the S&P this morning. You can see this was yesterday's price action. This was the dip on the PPI data that came out extremely hot. The markets then promptly rallied back as buy the dippers came in, which they've been programmed to do for oh so long at this point. We then had a little bit of selling, a little bit of up, a little down, and ultimately the markets closed basically flat on the day. Overnight, the futures ground higher. And then this morning, we are seeing a little bit of selling here, but for the most part, we will open up about 10 points higher on the S&P futures. Now, the NASDAQ is under pressure today. It is underperforming. If we look at where it closed yesterday, the NASDAQ 100 closed here around 580. And it is currently trading around 579.50. So it's not down much, but the culprit of this drop is AMAT. Applied Materials, take a look. Let's go to the intraday chart. This stock reporting earnings yesterday after the bell and taking an absolute beating. Now, their earnings were okay. It was their guidance. Now, this is again, we're seeing more and more of these chip companies, right? These ancillary plays in the AI sector that are seeing massive drawdowns on earnings. Now, listen, as long as Nvidia holds up, and I'll show you a trend line on Nvidia that I continue to watch, as long as this trend line does not break, aka Nvidia holds up, then really these drops are just warning signs. But if Nvidia breaks, that's where, in my opinion, you see a major correction, not only in the semiconductors as a whole, but also in the markets. All right, now let's go back to the AMAT chart, Applied Materials, and take a look. So we are trading down. You can see my trend line right here. This is where I will be looking to start trading it today if it gets down there. Take a look at this chart here. I've already kind of isolated down the technical levels for you guys on this chart. And what we can see is there's a beautiful downsloping trend line right here connecting to here and right through this pivot high. And then look at how it behaves when price breaks above, comes back in, and tags it. So that basically establishes that this is a major trend line, and it's a downsloping or descending trend line. Then you also have this underbelly flat bottom right here from this pivot point, which was a former gap fill, and those coexist in a range, a $2 range on the stock around 157.75 to 155.75. So there's a $2 range there that should be looked at as a very good opportunity for a trade today on the long side. So essentially, the idea here is that price could flush into here. It's already trading at 160, 170, so it's about $4 and change away. If it flushes into that, we should get some sort of $1 to $2, maybe even $3 bounce. And as a trader, that's really all I'm looking for, right? Again, I'm not looking for this to go back to all-time highs. I'm not looking at to go all the way back up. You can't expect that. The news was not good. And the markets are at all-time highs, and this is already seeing pressure. So now just imagine the stock market just has a run-of-your-mill 5% drop. Where does AMAT go at that point? So it's not really a mid to long-term swing trade, or in my opinion, a long-term investment yet. But again, a tradable opportunity absolutely at that level. All right. So just wanted to go over that. Now, let's flip back to the S&P. And I only covered this, by the way, is because it was literally the reason why the NASDAQ is under pressure. We're seeing semiconductors overall seeing some selling pressure today. So I wanted to cover that in kind of my opening roundup of what the markets are doing. But if we flip back to the S&P 500 and we go to the daily chart, we can see that yesterday, even though the S&P eked out a tiny under 2-point gain, so it was basically flat, we did not confirm a breakout above this trend line. And again, we still are struggling at this trend line as well. So just to zoom out and show you guys where this is, there's a major starting point back in October of 2023. Both the parallel and this upsloping trend line start there. What we can see again is that the parallel works perfectly here. We hit it right here and we pulled back. We've now inched above it, but have not confirmed a break above that. In addition, we still have to monitor this trend line, which again is an ascending trend line connecting through that low in October of 2023 to the low in August of 2024. For those of you that remember that collapse, that was epic. Sunday night, I remember seeing the futures down like 4 to 5%. It was nasty. And then basically that was the bottom. The panic was the bottom, as so often is. But ultimately, we broke below it. Came down in April to make our low. We've traveled all the way back up, hit it here, pulled back, and we just touched it yesterday. And again, basically had a minor pullback, but let's watch today where that goes. NASDAQ 100, guys, if we look at the NASDAQ 100, this is also an intriguing chart, as again, it is a shorter term parallel that goes back to really May of this year, the low pivot. And you can see every low matches perfectly with a trend line that, again, if we just bring it up here, is perfectly parallel here to there, and then we just hit that on the gap up a few days ago. So again, listen, the markets obviously are into resistance. They're overbought. Does that mean that they're not going to go higher? Frankly, no, it doesn't mean that. We've seen the markets defy gravity. But as a technical trader, I'm always on alert, because what the thing is we have to understand is we all know at some point, I mean, listen, it doesn't matter if you're a big bull, you know it's not healthy to see a market go up this quickly, this fast with no corrective moves. So whether it goes another 5 or 10% first, okay, that's arguable. You could make that case, but we all know it's eventually coming where we'll get a 5-10% pullback. And my job here is to watch these key levels to see, do we get those topping tails, those reversal signals, those hits of those parallels where it could begin, right? Ultimately, I don't want to be caught off guard when that does happen. All right. Let's look at the dollar today. The dollar, now normally, guys, if we look at this chart, I had a shorter term parallel for you guys here. So if we look at this, we can see again, classic. This was the short term parallel that I've been showing you guys. But interestingly enough, it's a short term parallel with a much, much bigger parallel. Look at this, guys. In fact, I'm going to get rid of this parallel here. This one goes back to 2022 when the dollar was at its highest point. And so really, if you look at this chart, the dollar has been so slowly slipping since 2022 and just grinding. Now, listen, it hasn't gone down that much. I mean, well, in all fairness, I mean, it's about a 15+% drop from this high. But again, that's been over 3 years. And you even had a peak over here. But the point being is that it's very clear that we are in a downtrend since 2022. Notice again, this was COVID and the fear over COVID here. The dollar obviously getting, so much money flow from countries that were looking at the US as the kind of the gold standard, if you will. But since there has been a slow decline in the US dollar. And really what this tells me is that it likely will continue. Now, it doesn't mean we're not going to have bounces along the way. I mean, here you had a high and a lower high, but from here to up here, it was a massive move to the upside on the US dollar. So that can always happen, but we're still in a downtrend on the dollar. And again, a lot of people made this big deal in 2021 about this de-dollarization that was going to happen like overnight. And I always came on these game plans even then and said, guys, it doesn't happen overnight, right? Yes, I believe the dollar will slowly be diversified away because countries, especially now with the trade wars, they don't feel so comfortable putting all their eggs in one basket of the US. And so you will see that. But this is something that takes literally decades to occur. You don't see a reserve currency vanish from one day to the next. It takes time, and that's important to understand. And so, yes, is this longer term good for gold? Yes. Is it longer term probably good for Bitcoin? Yes. And maybe other physical assets as well that are denominated in terms of dollars. But overall, it's a long term thing. These things don't happen overnight, for sure. All right. Back to the charts we go. The U.S. 10-year yield, flattish on the day, had a nice bounce yesterday because obviously we got the PPI data that showed us that inflation was jumping up. One thing to note, we did see the Fed watch tool showing us that we went from previously 3 rate cuts expected in the remainder of the year to 2. Now, that's not a huge difference, but again, it does explain a little bit of that initial sell side action in the market yesterday, even though it did recover generally. All right. By the way, folks, today is options expiration. Some funny business can go on in stocks into the end of the day with options X, as those institutions don't want to pay out calls or puts if they can help it. They always want to grab as much premium, aka profit, as possible. So just be aware some wacky stuff happens on Fridays of options X here. Intel. Here's your Intel chart, guys. Intel gapping up. You can see, again, if we go to the intraday chart, this was that big pop into the end of the day on the back of word that maybe the U.S. government would be getting a stake in Intel. And again, Intel pushing up, and then even after hours trading and inching up just a little bit here. So that's one semiconductor stock that's doing well, but it's not a huge company anymore. And again, in terms of a trading opportunity, so if we look at this, there's a gap fill that I would look to potentially day trade short on Intel at around 25.90 right there. You can see the gap right in there. That would be my first potential level. So it's about $1 away from hitting that potential short day trade level. Applied Materials, we've already talked about, guys. We'll keep an eye on that as it continues through here, but I gave you guys my levels there. Now, I did want to just touch on this. So Coreweave. Coreweave, a few days ago, was trading at $150 a share. It is now pre-market at $93 a share. Coreweave was a great example of something that probably should not have been trading up where it was, but because of excitement over this relatively recent IPO, you see these massive moves, essentially a bubble. Now, again, early in the game plan, I talked to you guys about we're slowly starting to see more and more of the semiconductor stocks collapse. AMAT today, Coreweave over the last few days. You could go over other ones as well. Now, listen, the strong ones like AMD, Nvidia, Broadcom, those are the shining horses. Those are the leading stallions of the group. They are still holding up. But we're seeing cracks emerging in the semis with more and more starting to not just pull back, but have major drops. And that, again, is something that I'm monitoring on the semiconductors. So, again, Coreweave, great drop. Is it tradable today? Possibly. I'm, again, looking at a potential level of around 89.50 for a little bit of support there. It's trading at 93.46 currently. All right, we got to go on to the next one, guys. We have a lot to go over today. Take a look at UNH, UnitedHealth, surging to the upside. I've been kind of beating the drum on some of these stocks, guys. They've been so beaten down, and ultimately Warren Buffett agreed with me in this one, and he picked up a 5 million share position, over $1 billion of stock in UNH. The stock obviously ripping on that news yesterday after hours. Also, David Tepper, who's one of the best hedge fund managers in the world, he picked up a position in this as well, and you're seeing this stock ripping higher. If you're in smart money stocks and ETFs in the dividend trader, which is part of that service, we had a decent sized position here in this, and we are now in the money sizably on this. So again, reading the tea leaves for these value plays to make a move higher. Now, is there a shortable level here? The answer is yes. There is. If you're aggressive, this high pivot at around 326 would be my level. It's still a long way away. But again, if you think about it logically, you don't really want to step in front of something that's so beaten down to short it initially, because this could short squeeze. It obviously has Warren Buffett behind it. I would let it breathe a little bit. And then if it somehow gets up there intraday, yeah, maybe a quick day trade short can be taken. But remember, day trade, by no means do I think this isn't going to go higher. I'm still a big bull on it. We wouldn't have a position in it in the service if we didn't think that. But again, understand the difference between day trading and swing trading, or day trading and investing. Day trading, you're jumping in for a $1 or $2 or $3 pullback. You grab your money and you run. Very simple, high percentage win rate. Again, I think we bat about 90% win rate in the live day trading room. So we're in and we're out, and then we might still have it as a long position in our core holdings and be riding it up all the way. Doesn't mean we can't make money on these little bit of pullbacks. All right, and that's why I give these levels out as trading opportunities. All right, so UNH. Now, just before we get on to Bitcoin, I just wanted to show you again. Here's your Nvidia chart. This is the trend line that I've been referring to. Nvidia, beautiful upsloping trend line. Notice yesterday it opened below and then recaptured, so it did not break. This is the trend line on this semiconductor, $4.5 trillion company. That again this is the crux of the semis. As long as this does not break, the markets are very unlikely to have a big down day or any sort of major correction. Once it breaks, okay, now you start saying, okay, it's broken. The biggest play, the biggest market cap in the market has now broken a key support. This could be a signal of a coming market correction or semiconductor bigger correction. All right, so watch that. That trend line to me goes amazing, how it goes all the way back to that April 7th low. All right, Bitcoin. What a drop on Bitcoin yesterday. We talked about how on a technical basis, the topping tail was negated. But again, it created what we call a double top. And lo and behold, what a sell-off. I mean, yesterday was a nasty drop in Bitcoin. In fact, this candle from peak to trough is really the biggest move that we have seen in Bitcoin in a really long time. I mean, again, if you take this, I mean, match it up. Where was the last time we had a candle of that magnitude? Honestly, you have to go really far back to see this. I mean, even here, close there, maybe right over here in March of this year. But the point being is that, listen, as of now, this chart to me has a slight negative bias only because of this down move. Double tops are good, but you have to watch what pattern forms off of them, right? So I talked about this yesterday in technical analysis, right? So if you have a double top and then you start going like this is a bull flag and you're likely going to break out, okay? Now, when you get a big reversal candle, it starts to say, okay, wait a minute. This is a bigger stamp of that's not the candle that a bull wants to see, right? So that's just something we want to monitor here. Now, listen, if we go right back up, it negates that and we go back into that kind of neutral looking for maybe a breakout. But right now, the double top would be looked at as being the dominant force because of this big red reversal candle. So again, the point being, let's wait and see. Let's give it some time. Let's see what happens over the weekend. We'll come in on Monday. I'll do the game plan on Monday. We can reevaluate based on what happened over the weekend. Speaking of which, guys, just a quick note that on Monday, starting on Monday, the game plan, this game plan will be on the Verified Investing YouTube only. Right now, it's streamed on both channels and our homepage. It'll be on the Verified Investing YouTube homepage or YouTube and our homepage. So it won't be on my channel anymore. So you just have to go either to YouTube for Verified Investing or to the homepage, verifiedinvesting.com, one or the other. Doesn't matter. It's still going to be the same awesome show. I'm still doing it. Nothing changes in that regard, just where it's being streamed. It won't be streamed on my channel. Same thing with trading the close. Now, I will be doing additional content. And if you've been following my YouTube this week, I've been doing much more specified individual stock, crypto analysis in video format. And I'm releasing 1 to 2 of these a day, delving into not only the daily chart, but the bigger timeframes and forecasting out. So there's lots of value. In addition, I'm going to start doing a homesteading show on my channel. Now, this is exciting for me because I'm in the process of developing and building a home on basically 30 plus acres. And I'm going to be doing it literally. This house is going to be a fortress, concrete structure, ballistic windows, safe rooms, garden fully with chickens. Like bottom line is this is going to be awesome, and I want to document it for you guys as I build this out. I'm very excited about it. It's kind of my dream project, but I will be kind of unveiling that on my channel over the course of time. So I know a lot of us dream about that, about having sort of that house that is indestructible in many ways, and that's the goal here, is to make sure that it is basically natural disaster proof and proof in many other ways, and self-sustaining garden, fruit trees, greenhouse, animals. You got it, guys. I'm going into a different. Now, listen, I'm not leaving you guys. I'll still be doing trading. I love trading with a passion. I'll still do the game plan, but I want to also give you guys insights into this. All right, back to the charts. Sorry about that, guys. We'll get back to the charts. I just wanted to give you that little update. Solana's still stuck in a parallel. Didn't quite reach the high here before pulling back. I think the Bitcoin drop yesterday kind of took a little steam. Otherwise, I think Solana would have tagged this level before pulling back. Gold today, let's take a look here. Gold again, flatlining. You have a down candle being rejected. First support is going to be around 3270 on gold, followed by, if it breaks, you'll probably head down to 3100, down to about 3050. So again, as of now, let's respect support, but if it does break, then you have down to this kind of bigger parallel, which, by the way, is still a bigger bull flag. Okay? All right? So again, keep an eye on that one. Next up, let's take a look at oil. Oil coming in just a little bit. Okay? So again, we'll keep an eye on that. But oil, again, I still have a target down here of around $60 and change. So again, keep that on your radar. If we look here, guys, silver is coming down a little bit. I have no real new updates on silver. There's nothing new to talk about. The level of resistance remains the same, around 39.70. The support level remains the same at 34.65. And then lastly, natural gas real quick. Let's talk about that. Nat gas is retracing after it broke this trend line here. It's now retracing. Now, one little tidbit, ask yourself, did it ever confirm below this trend line? The answer is it did not. So what does this make this? Quiz yourself right now. Is this major or minor resistance? Okay, major or minor? What do you guys think? Okay, and the answer is it is only minor. Once you confirm the breakdown, then this becomes major. Now, what is the difference maker there? The difference maker is that major would have a high probability of rejection and price going even lower. Minor still has a favoring of rejection, but only slightly. In other words, it's easier for price to break back above. So it still favors a downside move, but it's not as high percentage-wise as, again, if it had confirmed to the downside. These little tidbits, by the way, are epic in terms of the difference makers between great traders and mediocre traders. Understanding these nuances. And of course, as always, guys, I want to bring this to you. I want to educate you guys. I want to give you actionable information. And it's one of the reasons why I love doing these game plans, because again, your comments, the fact that you guys are tuning in, some of you guys literally every day, it's your staple of your morning. I want you to know that I appreciate that. We all do here at Verified Investing, and you guys supporting us and supporting this no BS, like social media and the mainstream narratives. Like, let's just look at the charts, right? Let's find out what the charts are, because if you're like me, when I pay attention to all that other nonsense, it sways me emotionally, and I usually end up making the wrong decision. So anyways, go have a great day. Happy Friday. I will talk to you, of course, soon. I will be doing the daily wrap-up, the daily, weekly, or the weekly wrap-up this afternoon, so I'll keep you guys updated on that. Have a good one, guys. Take care.